In this video today, we will discuss the latest VA mortgage programs and qualifying requirements. Homebuyers and current homeowners that have questions can reach out to us 7 days a week by visiting vamortgagehub.com or simply calling 1-800-691-8826. Today we will cover the standard VA purchase loan. We'll also talk about the VA jumbo high balance loan for homebuyers in high cost locations, and then the two VA refinance programs, the VA Streamline interest rate reduction refinance loan, or IRRRL for short, and then we'll also talk about the VA cash out refinance. First, we will discuss the VA loan eligibility. Homebuyers may be eligible for a VA mortgage if they meet one or more of the following conditions. They have served 90 consecutive days of active service during wartime. The veteran has served 181 days of active service during peacetime. Or the vet has more than 6 years of service in the National Guard or Reserves. Or you are the spouse of a military service member who has died in the line of duty or as a result of a service-related disability. Now we'll discuss the basic VA purchase qualifying guidelines. It's important to note that VA eligibility and qualifying are two separate things. If you're eligible for a VA loan, as we looked at in the previous slide, that doesn't automatically qualify you for the program. The VA mortgage, like any other home loan, requires certain qualifying criteria to be met. With the VA loan, it does have certain requirements regarding credit score and things of that nature that we're going to talk about just for a minute. The credit score requirement, this can vary from lender to lender. And bank to bank, but most lenders for the maximum financing of 100% will like to see a credit score of a 580 for loan approval. Again, some lenders could be slightly less. Some may require a 620 credit score, slightly higher. That is internal overlays within the lenders. Sometimes they put their own requirements on top of whatever VA says, and they can certainly do that, and that can change. It does change between bank to bank or lender to lender. So generally 580. Now, it's important to also note that the minimum credit score requirement, that doesn't automatically guarantee that the home buyer will be eligible for financing. There are additional requirements for anyone that has experienced a serious financial hardship in recent years, like a bankruptcy or maybe a home foreclosure or short sale. So it's important to note that because if you do meet the minimum credit score requirement, that doesn't automatically guarantee or ensure that you're going to be qualified for the program. You want to make sure you contact us and check on additional requirements if you did have any serious financial hardship. Borrowers will want to have the ability to document their income and assets. Again, like any other government mortgage, we will look at documentation for borrowers that are employed. They'll look at 2 years of tax returns and W-2s, and then also review a few months of bank statements to look at those things related to the assets and down payment if you are putting a down payment. This also applies to any veteran that may be on full-time disability. They would also want to provide documentation in regards to that, and we can help you with that. Borrowers must meet debt-to-income requirements. Just like, again, any other mortgage, there are limitations on the debt-to-income ratios. This exact number limit can be different depending on the borrower's overall qualifying criteria. credit score, maybe if they're putting a down payment. Those are factors and influences that can determine really what the maximum limit is for debt-to-income ratios. VA loans are for primary owner-occupied homes only. Investment properties are not permitted under the VA purchase loan, so that's important to note as well. Some of the benefits of the VA purchase loan is, again, it's 100% financing. There is no down payment required. Home buyers can put a down payment if they decide to, 5%, 10% down, that's perfectly okay. 100% financing is not required, but it is available. And that is one of the main draws to the program, is that VA is one of the last remaining loans available that does allow a home buyer to purchase with no money down. And of course, there's no mortgage insurance, or PMI, as most people know that term, with a VA loan. That is a big part, big savings to each month, is that there is no monthly mortgage insurance. Sellers can pay all the buyer's VA allowable closing costs. So a home buyer can essentially do 100% financing on a home, and then also have their closing costs covered, and essentially move into a home with very little to no money out of pocket. The program has secured fixed rates terms with no early payoff or prepayment penalty, meaning home buyer can move and pay off their mortgage, or sell their home, and pay anytime they can pay off their home loan and not have any kind of penalty for doing that. And the loan amount limits range from $424,100 to over $650,000, and this is for the standard VA purchase program. $424,100 is most of the United States, most of the country. Now, the high-cost locations, California, for an example, South Florida, the Northeast, for parts of Virginia, those are high-cost locations, and they do allow for the loan amount limits that are greater. And then borrowers also have additional jumbo options that we're going to look at in the next slide. VA jumbo or high-cost loans are available, again, for loan amounts up to $1.5 million. Now, it's important to note that this program, this is not 100% financing. However, the down payment that is required is often less when compared to regular jumbo loans. Many regular jumbo programs, they require 10, even 20% down payment with some lenders and banks. So this program generally requires less down, and it's also easier to qualify. It's a lot less restrictive underwriting guidelines when compared to a standard jumbo loan. These standard jumbo programs also require very, very good credit. In most cases, borrowers will need to have credit scores in the 700s to be approved for jumbo loans with less than 20% down. There is no monthly mortgage insurance, and of course the seller can pay all the VA allowable closing costs, and just like the regular program, there's secured fixed rate terms and no prepayment penalty. And the next slide, we're going to look at the down payment calculation and how home buyers can figure out what is going to be expected with a down payment on the high cost or high balance jumbo loan. Okay. VA jumbo down payment calculations. In this example, basically what home buyers want to remember is that any amount that they exceed the conforming loan limit, again, that's $424,100 in most of the United States. Any amount that exceeds that, they will have to put down 25% of that amount. So in this example, we have a home buyer that's going to purchase this $650,000 house in a non-high-cost county where the loan cap is $424,100. The veteran is exceeding the basic VA loan limit in this example by $225,900. So the veteran will need to put down 25% of $225,900, or in this case, $56,475, or just shy of 9% down payment. Remember that this is a non-high cost location. So some of the higher cost locations, again, Florida, California, will have 100% financing up to $636,150, and then any loan amount exceeding that will require a down payment of 25% just on that difference that's exceeding the limit. If you have questions about calculating a down payment on a jumbo or a VA high cost loan, please reach out to us. We'll be more than happy to review those things and look at the details. VA refinance programs. There's a couple of good VA refinance options. The first one is the Streamline interest rate reduction refinance loan, or more commonly in short known as the VA IRRRL program. This is great for homeowners that just simply want to reduce their interest rate. It's a very streamlined process. This program does not require new appraisal. It does not require new home inspection, anything like that. And borrowers can be in a negative equity situation, meaning you're upside down or underwater on your home. That has been a big, really one of the drawbacks of a lot of refinance programs in recent years is they require a certain amount of equity in order to be approved to refinance. The VA Streamline program, again, this is for homeowners that have a current VA mortgage that is current. This provides an easy way to reduce your interest rate, reduce your payments, and definitely do it without a lot of obstacles. Okay. Now, there is also a VA cash out refinance program. This is for the homeowner that does have maybe significant equity in their home, and maybe they want to cash out some of that equity to do a debt consolidation, pay off higher interest debt, high interest credit cards, high interest maybe installment loans or an auto loan, or cash out equity to pay for some much needed repairs or renovations around the house, or maybe college tuition. It can be used for a number of things. This program will require a new appraisal, will require all documentation, just like the purchase loan, documentation regarding income and assets, and borrowers will need to meet the debt-to-income ratio requirements, just like the purchase loan. But they do allow up to 100% loan-to-value for cashing out equity. So that is good for, can be a good tool for a lot of situations, especially for debt consolidation. Call us if you have any questions about that as well, and we'd be happy to help. Home buyers that want to learn more about any of these programs are encouraged to visit the website. It's a wealth of knowledge and helpful videos and weekly blog that has really all the latest requirements. It's important to note that loan requirements, they can and often do change, so you can keep up with all that by visiting the website at vamortgagehub.com, or talk to a specialist 7 days a week direct at 1-800-691-8826. Please remember to subscribe if you like the video, and we appreciate you listening today. Thank you.